Good morning, Matt, and welcome to this overview of crowdsourced funding as it affects directors and senior managers of small businesses and medium-sized businesses. You are
Cheers, Peter. Thanks.
the managing director and responsible manager of Billfolda, who are one of the intermediaries appointed by the Australian Security Investment Commission. Could you tell us, first of all, what type of businesses you think are suitable for securing funding via crowdsourced funding equity raising?
Yeah, thanks for having me on, Peter. I think it's a great place to start because equity crowdfunding is something that fits within a framework. So you'll need to be an Australian company, and in the context of having a majority of Australian directors, there's a cap on the amount of assets, $25 million, and various other tests around the actual company itself and the office holders. So it's targeted at building innovation and job creation in Australia. So that's a very broad net, and it's even broader thanks to some amendments that went through Parliament last year that enable proprietary companies as well as public companies to use the model. So a proprietary company needs to have 2 directors, which again is pretty light threshold, but it's a mandatory threshold for use of the model. You're still talking about a lot of companies that probably wouldn't traditionally look at fundraising. So you need to actually look at the type of decision that an investor will make when assessing that company. Is it the type of company that has the capacity to scale and to grow? Does it have competitive advantage? Does it address more than a local market? If that business is starting to look like an attractive proposition from an investor's perspective, then equity crowdfunding looks like an available option. But it's not an available option to get out of the company. It's an available option to grow the company, because the service that's provided is issuing new shares. So the money comes into the company, and there's a requirement there that money comes in, that it can't be used to then repay related party loans. It could go to a subsidiary, but it can't go to a related party loan. So it's not a cashing out event. So you really got to look at the right timing for the right company to use equity crowdfunding. And that's very exciting from the perspective of businesses who are constrained on capital growth, or that have the capacity to grow very rapidly with additional capital. And some businesses that are very early stage. But don't confuse it with the concept of an idea and then being able to get into equity crowdfunding. The business will really need to meet some basic hurdles. And from our perspective, we'd probably use the expression "a bit of skin in the game." And investors come along and put money into the company. They'll want to see that the actual management and the leadership group there is actually also invested significantly, and probably not just in time.
Okay, that's very interesting. What do you think the time frames are for a business? We might have people out there now that have got businesses that are 3 or 4 years of age. They want to scale up. They want to go somewhere. What would you be saying to them as to a time frame that they could realistically look at to raise crowdsourced funding equity funds?
So the time frame is going to depend not necessarily on the age of the business, but the work that needs to be done to engage an investment community. So there's minimum compliance and checking, and anything less than 1 month for that is completely unrealistic. But really, the longer term projects are about actually engaging with your potential investment community, which might include customers, but with a different conversation. It's not the conversation about, we've got a great product and you'd like to buy our product. It's a conversation of, we've got a great business and wouldn't you like to own some of that business? And the error can quite often be that the two are automatic, but actually that just coming to a customer and saying, look, here's our company, we're for sale, and they might like the product, but then you're confronting them with all this different information, and it's really not something that you'll be able to do easily. So we're really encouraging people to have a lead up period in terms of that communication and changing the conversation with their customer, and also to reflect on that a business will need to build up its book of potential investors before starting a crowd raise, because it's very transparent and very accessible fundraising. That investors who turn up to an offer that's been open for a couple of days and they see no one is willing to invest it, that's actually giving you an immediate negative signal. So you actually need to really work on prior to the raise to build momentum when you start. And that's not to trick other investors, but it's just to actually show that there's a heartbeat and some proof of life in this thing. So
show a bit of confidence from people that know something about the company.
Well, that's a fair point. There's a lot of information provided, but getting people to engage in your particular investment is something that will need a minimum amount of invested time before you actually open an offer.
Okay, righto. What's Billfolda's unique competitive advantage to this market?
So we were one of the first seven, or equal seventh, first seven licensees, and we advocated throughout the process of building the legislation. So we know it inside out. So you've got a compliance partner that actually can take you through this journey in a way that actually delivers the result. That's heavily networked throughout the industry. But that's really about what you have to have. What we do that's special for our business is that we take a view and a position with the investors by taking shares in the company. So if the fundraise is successful, we take an investment rather than the cash and walk away. And that positions us in an alignment with the investors and hopefully shows the commitment that we have to each and every offer. That same process also benefits the issuer company, because the issuer company knows that once you've gotten through that process, that this particular intermediary is not just taking a short-term approach. We really want to build that opportunity, and not just about the funds that come in, but also about the result from the fundraising offer, the building the customer and the loyalty around the brand, the potential PR, media activity around it, to really propel that business into that growth cycle that was really the reason what brought them to us in the first place. So it's an exciting proposition, but it's also one that requires a fairly heavy investment at our end. So we're standing alone in terms of being the only platform that offers a service on that basis.
Yes, I've noticed that, and looking at the other site, so it's going to be very interesting. Are you proactively seeking board appointments for that investment?
Look, we wouldn't rule it out, but we're taking typically at the end of a fundraise a minority interest in the company. So we look at that conversation around, well, look, is this company in its own right? Not because we're telling it what to do, but is this company going to be able to deliver for the investors? And that's the same for somebody using the platform as it is for us. Now, obviously, we've got experience in these type of investments, but we're not going to be really in a different position as another equity holder. These are early stage innovation companies. They are high risk, and so we're from the point of closing the offer. We're obviously hoping for the best, but we're not going to expect that every post's a winner. To be frank, if we wanted to be a director on every board to try to ensure that, then we wouldn't have enough people to fill all the vacancies.
Yeah.
So.
Okay. Well, thank you very much for your time today, Matt. I know you're a busy man and you're wearing two hats, one for the Industry Association and one, of course, as the Managing Director of Billfolda. So good luck, and we look forward to being able to talk to you later in the year as to how Billfolda is going in the marketplace and how your clients are going. So thank you very much.
Cheers.
And have a great day.
Thank you.
Bye.
Yeah.